Alaikum. This is Adeel Khowaja, a certified investment advisor. पिछले एक हफ्ते से मैं कुछ बोल्ड स्टेटमेंट्स दे रहा हूं अबाउट पोटेंशियल रिटर्न्स इन स्टॉक मार्केट, और वो भी ज्यादा दूर नहीं, सिर्फ दिसंबर 2025 तक। और आज भी मैं इसी टॉपिक पर बात करूंगा कि कैसे मुझे 15% से 20% तक मार्केट में पोटेंशियल रिटर्न्स नजर आ रहे हैं। लेकिन यहां आंख बंद करके इन्वेस्टमेंट नहीं करनी, बल्कि जो चीजें नजर आ रही हैं उनको अंडरस्टैंड करके और अपने रिस्क एपिटाइट को देखकर फैसला करना है। हो सकता है जो लेवल्स मुझे दिसंबर 2025 तक नजर आ रहे हैं वो मार्च 2025 तक अचीव हो जाएं, क्योंकि सर्कुलर डेट वाले मामलात में थोड़ा सा डिले है, बिकॉज चाइनीज IPPs ने लेट पेमेंट सरचार्ज वेव ऑफ करने से इनकार कर दिया, जो सर्कुलर डेट का पार्ट नहीं था। और इसी वजह से एनर्जी, ऑयल और फाइनेंशियल सेक्टर्स में अनसर्टेनिटी रही और मार्केट में कंसोलिडेशन नजर आई। लेकिन आज जिस टॉपिक पर हम बात करेंगे वो न्यूज मेरे हिसाब से विल आउटवे द सर्कुलर डेट डिले। Pakistan and Saudi Arabia are stepping into a new era of strategic partnership and economic transformation. Following the recent defense cooperation agreement, both nations are now translating their long-standing friendship into tangible economic collaboration. In the last few weeks, a series of high-level visits have set the stage for something unprecedented, a shift from symbolic agreements to firm, executable investments across Pakistan's most promising sectors. Prime Minister Shehbaz Sharif, accompanied by key ministers and the Chief of Army Staff, is visiting Saudi Arabia from October 26th to witness the signing of binding investment agreements, not mere moves. Pakistan has presented nearly $28 billion worth of investment opportunities across 40 strategic projects. Among them, $10 billion for a new greenfield petroleum refinery, $5 billion for a petrochemical complex, $3.6 billion for the Dimer-Basha Dam, $2.3 billion for key motorway projects, and $9 billion interest in the Reko Dik copper gold project through Manara Minerals. These are not just numbers, they represent jobs, exports, and fiscal stability with deep implications for Pakistan's long-term economic trajectory. The message from Islamabad is clear: no more moves, only firm, bankable deals. This shift in mindset reflects Pakistan's institutional readiness under the Special Investment Facilitation Council, which brings civil and military leadership onto one platform to fast-track foreign investments. Combined with a stabilizing macroeconomic environment, an ongoing IMF program, and improving external balances, Pakistan is signaling to global investors that it is open, reformed, and ready for growth. Despite this improving outlook, Pakistan's equity market remains attractively priced. The KSE 100 index stands around 163,000 points, trading at a price-to-earnings ratio of only 8.5 times, among the lowest in the region. To put this in perspective, Pakistan's market historically cycles through three valuation phases. Pessimism zone 6.5 times to 7.5 times when fear dominates and liquidity dries up. Comfort zone 8.0 times to 9.5 times when stability returns and fundamentals matter again. Optimism zone 10 times to 11.5 times when investor confidence and foreign inflows drive re-rating. Today we are comfortably in the middle of the comfort zone, reasonably valued with upside potential still intact. From a technical standpoint, the market's RSI indicates that we may be entering a short-term overbought region, suggesting some cooling could occur. But remember, overbought conditions often emerge during the early stages of bull markets, not at their end. The broader trend remains constructive, supported by rising earnings expectations and renewed institutional participation. Let's look at the numbers. Based on current corporate earnings of roughly PKR 19.2 trillion, the KSE 100's level of 163,000 points corresponds to an 8.5 times multiple. If driven by these positive developments, the market multiple expands to 10 times. The projected index level would reach 19-200 times 10 or 192,000 points. That's a potential 18% upside, excluding dividends. And if earnings continue to grow as foreign investment flows in, this upside could be even greater. Pakistan stands at a rare inflection point, where strategic geopolitics, economic reform, and market opportunity converge. With the Saudi investment pipeline taking shape, a stable macro environment, and a credible IMF framework, Pakistan's outlook for 2025 and beyond appears brighter than it has in years. As valuations remain attractive and structural reforms take hold, the potential for 15% to 20% returns by December 2025 looks achievable. The window of opportunity is open, but it won't stay this way forever. Confidence is returning, capital is moving, Pakistan is evolving. Don't miss the opportunity to be part of this transformation. The investment in stock market through mutual funds is not only offering potential returns, but also a tax efficient. For any advisory, you are welcome to reach out to me at investingwithadeel@gmail.com. Thank you and have a nice day.